Hey guys, and welcome back to the Ryze Trading YouTube channel. Today we're going to be talking about market structure, which leads us on perfectly from our last video, which is about multi-timeframe analysis. Now, market structure is probably the most used concept in trading. Many reasons, because it depends on your strategy. If you're using break and retest, if you're using smart money concepts, whether you're using breakout trading, support and resistance, or supply and demand, no matter what you're using, market structure will come into play. Market structure helps us decipher whether we're going to buy or sell. It helps us decipher whether the market is bullish or bearish, which means if it's going to be going up or going to be going down. And on top of this, it helps us decide where we're going to put our stop losses, take profits, and where we're going to enter our trades. So, shorthand, market structure is very, very important. Now, before we get started, please, if you haven't already subscribed, please subscribe to the channel. I'm going to be putting out a lot of content on trading, Forex specifically, but I'm going to bring out more trading content along the lines of stocks and cryptos as well. And again, if you haven't already, please follow the Instagram. The link will be in the description, or as you can see in the corner, it is just Ryze Trading on Instagram. We are posting a lot of educational content on there, specifically around smart money concepts, but we are doing a lot of basics on there as well. So there's something to suit everybody. But without further ado, let's get straight into the video. So, firstly, the types of market structure. So there's bullish market structure, which contains higher highs and higher lows. For those of you who don't know what that means, a higher high is when the market makes a high that's higher than the previous high. Like this one, for example, this level is higher than this level. And a higher low, which is a low that is higher than the previous low, like this one is higher than this one, for example. Now, it's important to note that for bullish market structure, we have to go high, low, high, low, high, and low, etc., etc. We can't just go high and then we make a little bit and then another high that is just one high. We just ignore the bit in the middle. Same with bearish, it's exactly the same, but the opposite. So we've got lower lows and lower highs because market is pushing its way downwards, so we're making new lows and lower highs. And market that are ranging / sideways moving, as we see here, we go into from a bearish market, which is low, 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 high, low, low. And as I said, they have to alternate. So right here, we can see that price didn't make a new low here. So we've got lower low, and this low here is not actually lower than this low. So we're actually stuck in a range here between this high and low. Neither of these have broken. Now, we will get into this soon, but it's just important to note that you remember these three things on screen right now. Moving on, we have major versus minor. As you may have seen on the sideways moving market, we have a lower low, a lower high, a lower low, and price doesn't break out of these zones here between the high and the low. Now, the structure that's created in between here, as we can see, we have a high, a low, a higher high, a higher low, higher high, higher low, and a higher high before market then pushes down and makes a new lower. This becomes the lower high, and then it makes a new lower low down there. Now this is called minor structure. So the overall structure that we see, the ones that we've drawn out here, are major structure, and anything that happens within major structure before creating new structure, like this for example, is what we class as minor structure. Now there's a lot of things that market structure has to offer. Firstly, market structure is really basic. It's one of the first things that you learn in trading, but it's actually one of the most important and one of the things that we use on a daily basis. So it's important that you master this before you move on in your trading, because it's something that's going to make or break your technical side of trading in the future, and it's best to make sure you perfect it early rather than move on to the more complex things when you haven't mastered the basics. Moving on, we need to understand trend. So again, right here we have a lower low, low high, lower low, lower high, lower low. This bit is bearish, okay? Once we break this high here, so of course we would have had minor structure in here that's going up and down, up and down, up and down, until it breaks this low here. So at this point, this becomes a higher high because it's higher than the previous high. Now, after this, we have a higher low and a higher high. So at this point here, where this push happens and becomes a high high, we do not class this as bullish just yet. We want to see a higher high, a higher low, and higher high. We want to see two higher highs before we class the trend as bullish. This is what we call confirmation. If you're familiar with smart money concepts, which is the strategy that I trade myself, we call this first break is a change in trend, and the second break is what we call a confirmation of trend. Now after that, we can start looking for bullish trades, and this is really important where we decipher whether we're going to buy or sell in the market. Understanding these things is really important. I get this question a lot. How do you know when to buy? How do you know when to sell? How do you understand what structure is? Now, if you simplify it and you mark out your charts like this and you try and see it in the simplest way possible, this is what we're going to be looking for. Now, moving through it, a break of structure is what we class as major structure being replaced by new major structure. So this lower high has been replaced by this high here, and at the lower high level we have a break of structure. As long as price goes above this and closes above it, this is going to be our new higher high. Again, we'll get into it in the charts in just a moment. So one thing to note is market structure is time frame specific. So in here we see the 4 hour doing this. I've drawn it in the most simple form possible. From bearish to bullish market structure, we see that the 1 hour is also doing the same thing, but in a very different way. So you've got to remember that if you look at the market, you've got to be aware of the other time frames, which is why the previous video on the channel was about multi-time frame analysis. If you haven't watched that already, please head over there, watch that video first, and come back straight to this video. There will be a link on description and a link on screen for you to watch if you haven't already seen it. But we can see here this push downwards. We have a lower low, lower high, lower low, lower high, lower low, lower high, lower low, and that is just that 4 hour push here. And then on the way back up to make the lower high, we have a slightly like we created some minor structure here because we didn't break this lower high, sorry. So we created a minor low, and then at this point we break this high. As you can see, this bit is higher than the previous high, so we've made new major structure. So at this point, this is the low and this is our high. Same again, we make a low and we make a high. So this is our high, this is our low, and then price drops. We create the same push here. Sometimes price will look quite similar, and then we create, a slight low here, and then we're coming back up. Hopefully you get the point from this. I will show you on the markets on TradingView, but you've got to remember that trades are time frame specific and market structure is different depending on what time frame you're looking at. If you're going from something like the 4 hour into the 5 to 10 minute range, the charts are going to look extremely different. So last thing to note is key levels. Market structure is really important for our stop losses and our take profits. They are our key levels, so all major structure is a key level for us, and we always target our key levels for points where we're looking to either exit a trade or enter a trade. Right here on the lower high, we start seeing price move downwards, we enter a trade. Our first target should be the lower low here. At this point, we can either move stop loss to break even or target partials. And then our second target, pretend these are the same trades, we can just target lower, potentially structure on a higher time frame. Remember, it's time frame specific, but we will be able to see major structure on a different time frame, potentially a higher one that we can target for our trade. So that is how we do it here, and the same for bullish. Once price has changed, we get the confirmation here, we're taking a buy upwards, and that is how we would be looking at it. For our stop loss, we always clear the previous high or low. As you can see, this stop loss is below the low. Just because often, as we know about ranging markets, price can come back down to the low or come back up to the high, and price might hit our stop loss. So the safest way possible is to clear highs and lows on the time frame you're looking at. So without further ado, we will look at charts versus drawings. We're going to go over to TradingView and compare the difference between the two. Okay, welcome back. So now we're here on TradingView. I'm going to show you how I look at market structure and what it looks like on the charts. Now, I won't go too in depth, as this is supposed to be a basics video, just to help you understand why market structure is important and how we can start plotting it out. Of course, no matter who you are and what strategy you trade, you're going to be looking at market structure differently, whether you're where you see your highs, where you see your lows, how you identify your breaks, which time frames you're going to be using. So everyone's going to have a little different bit of analysis along the way, whether you are, Warren Buffett level, whether you're just Tom, Dick, or Harry. It doesn't really matter. You are going to be looking at market structure different. But just quickly, I'm going to go through it. For me, our high, I'm going to, from where we are here, we'd say this is our high. We created a low here, a higher high, higher low, higher high, sorry, lower high, lower low, lower high, lower low, lower high. Now we have a new lower low, potentially no high created, but we can actually move our low down to here. Remember, you can't go low and then another low. So what you would do is just move your low further down. Now then we have a higher high. You see we've broke the previous high here. And then we have a higher low, higher high. Now, as we can see here, this part of the market is pretty much just ranging. It doesn't go up or down. We don't really get breaks of highs and lows, which is really important to note because at this point, this is just minor structure within here. It is quite pointless when we're looking at high probability trading. So with that being said, our low is still the same. And then we move up to here. This is our high. So potentially this could be our low as it is lower than this. So that'll be our low. This is our high. So what we need to note here is this looks like this. And then price does this. So if we look at it like this, we can actually see that this looks a bit more familiar. Okay, if we just drag this out a little bit, drag this out, and then potentially just do this, now it looks a bit more like what we were looking at. Now, it's really hard to train your eye to start recognizing this on the chart, but you need to get a lot of practice in and prepare yourself to see market structure as easily as possible throughout the charts. Now, there is a systematic approach to it in a rule-based method, which is what I use because it takes out some of the guesswork. If you want me to show you this in the future, please let me know in the comments down below. As I said in the last video, I'm open to suggestions. Whatever you want me to record, leave in the video comments down below. Now, please, 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 don't everyone just ask for how to confirm your trades. I want to cover trading in the widest range possible, whether it be from beginner to expert levels, different strategies, different indicators, different challenges, and we will do every trading content possible on this channel, whether it be account flips and stuff like that, becoming a funded trader, using specific challenges and restrictions, making it harder for ourselves. We will cover a lot of entertainment content and educational content across the channel, and potentially bring in a podcast if that's something you guys are interested in. But back to market structure, we have to identify what this looks like here. Now, you see, this is looking like a form that you may recognize now, but it looks nothing like what we actually have on the chart. As you can see, there's all these candles in between. Now, this is where you have to learn to just narrow out the minor structure and just focus on the major, and everything that happens in between is, not important. Now, if we go a bit further back and we just do the same thing again, let's see. Okay. I'm trying to find some good examples here. So right here we have, let's say, our lower high, our lower low, our lower high, our lower low. Now this could be, well, we'll do it. We'll say that's the high, that's a new low, and now we have a higher high, a higher low, a higher high. None of these go above the previous high, so this is just minor structure. This is what we have to ignore, like I was saying before. Now, what we have is a higher low, higher high, and then we break and we make a lower low because it's previous range. What I see way too often is people looking back saying, this isn't a break because this is still below. We're looking too far back here. We need to look at the current range, the current high and low that we're in. and we see if price breaks. So right now we see price breaks, so that means we're moving across. Okay, what's next? We see a lower high, lower low. As we see, this is lower than this. Lower high, lower low, lower high, lower, and lower low is probably further across. Okay, it is. Lower low, lower high. So if we're looking at it like this, and I'm highlighting here from the highs to the lows, and then we get a break. And I'm literally just joining up the structures that we've drawn here. And we know price goes down again. Okay, so if I move this up, and let's have a look at it and why it's so important when we're looking through it. Now, if I just make it look a bit more even. So what we have is our lower low, lower high, lower low, lower high, lower low. Remember what I said. So when you get one break, that's a break. So we have a new high and we have another high. So this was our low and this is our new higher high. Okay, we break this higher high, we make another higher high, and we make another higher low. At this point, we have confirmed trend is bullish, but price can't just move in one direction. So price comes back down, it exhausts, okay? Because it has no more momentum to the upside. It comes back down, and then it's created liquidity again. Price goes up. And remember what we said, we confirmed bullish trend. So on that third drop, we're expecting price to go up. This is usually where we'd buy. Again, I will break down my strategy in the future and I will be releasing a course. And that's exactly why the content in between YouTube videos has been a bit slow, is because I'm focusing on working on a course at the moment in my spare time. So at this point, this is what we trade. And remember what I said, your key levels is where you target. So below the low and target the next high. So at this point, this would be our trade, and there's where we would have took a win. Okay, and then what we do is we move stop loss to break even, and we target something higher up, potentially this level here, and that's what we do. As we can see in this scenario, price drops, it takes out our stop loss, but we're already at break even, so this is technically a winning trade. Whether you class it as a win or not, that's up to you, but we didn't lose, so it's not the worst thing in the world. So at this point, we get a break. So if I just delete all of this drawing up here, oops, I could use the rubber, but being lazy. Okay, so if we delete that and we're looking at it again, this was our low, this was our high. So we broke it to the downside, we've made a lower low, lower high, lower low. What now? Same thing. We're looking at price exhausting. It comes back up to the previous high and then it drops. Okay. Now, if you trade in smart money, this is our order block or our point of interest. This is where we take the trade. Same thing again. We would enter here and we would put stop loss above the high and we target the low. Now that's a cheeky 4.4 risk reward ratio. And this is where we would take stop loss to break even. But to highlight it, I'll just put another order in, same stop loss, and then we just target as far down as possible. As we can see, with this specific example, we could have hit a 1 to 15 risk reward ratio. Now, it's obviously not going to happen every time. We took a break even here. It happens, it's normal. And then potentially we take partials, or we put stop loss to break even here. Once it breaks this low, and then we basically just continue following price. And our stop loss follows structure. So once we make a high, again, we move our stop loss above it. So our stop loss would come down to here. We make a new low, new high, and then new low. Our stop loss would come to here. And we literally continue price with our stop loss. And this is how we make long-term profits. And we consistently trade in the market. There's no point chasing. Same again, just to reiterate, we got a break to the downside. Price exhausts, we make another low here, and at this point, price is confirmed to be bearish, okay? This is how I look at market structure personally, and as you can see, since I've mimicked this drawing here, that is exactly what happened in the trade, okay? So price came down, we made a high, a low, we're entering off my point of interest, which is here. For example, we take the trade, price above the high, we target here originally, take partials and move stop loss to break even, and then we just drop. Now, one thing to note is, where would I target here? Okay, so as I said, in the PowerPoint area, we can use a higher time frame to see. Now, right here, there's not a lot of structure, so that's why I would just follow price in structure. But if we look left, I know it's quite far back, but there's a lot of support here if we drag across. So this could have been our target area to hit. Depending on the strategy you use and depending on how you've been taught to trade, that is something that you could potentially do. But yeah, looking into it, that is basically how market structure works and how you can identify bias, where to place your stop losses and take profits, all in a quick market crash video. But if you have enjoyed the video, if you found it useful, please like, and if you haven't already, subscribe and leave a comment down below what you would like to see next. Without further ado, I shall see you guys next time. Peace out.